Today's leading edge 2-minute business tip is talking about leasing when you first are acquiring a business or starting up a brand new business. Such a vital part to the business, not just for ongoing cash flow, but exit. Too many people I see get really blinded by the fact that they're getting some really good incentives up front. They've got a really good rent-free period, but long-term leasing actually jeopardizes the value of the business and operational. In the time I've been in the industry, I can see where people have taken $1 million fit out, they've taken a $500,000 fit out, but they've put it into the lease repayments. Come year 3 or 4, your business is either not profitable anymore because you're struggling because of fixed costs. So really crucial. So our tip right now is your square meterage, as we know, is important. If you're paying up above that $500 per square meter, then your location needs to be quite prestige. You'll either pay a higher premium per square meter for a high prestige location, a lower per square meter in industrial areas, but you will spend that money on the marketing. So it's where you spend the money on the marketing in the back end area, or to pay a little bit higher premium for a good prestige location. But really crucial, once you're reaching that $500, $600 per square meter, especially in boutique, you're getting into a little bit more of a hot water. So keep an eye on that. Incentives are great from a landlord, but you need to ensure that that doesn't increase the value of your rent too high from a resale value. Example, you might get a $100,000 incentive at the front end. Instead of your rent being $50,000 a month, it's going to go to $80,000. What does that mean as a resale value when you sell that business in 3 to 5 years' time? Because that is the rent that is going to be on the market at that time, which would jeopardize the value of your business or the new buyer. Look at demolition clauses. We sometimes get excited with a venue and what we're going to do, but we look in the second option, it's got a demolition clause, and we think, oh, it's okay, I'll be gone and sold by then. Can you sell though when you've got a demolition clause? What does that mean to the business? Your increase, right now, too many people are getting caught up in that 3.5% increase. Make sure you negotiate, keep it around the 3% or a CPI. They have some basic high level points to keep an eye on when you're looking at a new lease. So if you want to know more and want to talk about your leasing, please get in touch with us and we'll be happy to have a chat.